close, because this is a very helpful indicator into the close, is the vol spread. So we're going to use cash sign VOL SPD. And of course, if you ever forget what this is telling you, or what does this symbol actually tell us, just reference the header here, which gives you the full explanation. So this is the S&P 500 up volume versus down volume. So if you've got a stock that's up on the day, that volume is calculated as a positive value. Let's just say, for example, and here again, I think these things are easiest if you make very stark comparisons, just to kind of make this stuff make sense. So just for a second, let's pretend that there's two stocks in the S&P 500. One of them is up on the day, one of them is down on the day. The one that's up on the day has traded something like, let's call it 200,000 shares. The one that's down on the day is traded 100,000 shares. Well, that would leave you with a net vol spread of positive 100,000. So it's just showing you, for stocks that are on the day, how strong is that positive volume. It's a great thing to follow into the close. That way you kind of know where the bulk of the buying or the bulk of the selling is coming into play. And I especially like using it into the end of the day. So we throw in the symbol. I'm going to come into settings, and under equities, I want to make sure that we're not using the extended session. It's not a big deal necessarily, because there's not going to be any real readings from the vol spread in that after-hour session, but it just makes your chart a little bit cleaner. From here, I'll flip this back over into a 5-minute chart. And the other thing that I'll do on this to make the comparison, very clear, is add a cell below this one. You can notice here I've got 5 days worth of 5-minute data. So I want to pull up a chart of SPY and do the exact same thing here. So I go into Style and Settings. I want to make sure that I'm not viewing the extended session for SPY. I also don't need to see the volume for this analysis. And then of course I want to make sure I have the exact same amount of time on the exact same time frame to make a clean comparison. So I set both of these to 5 days worth of 5-minute data. I zoom all the way out to kind of make sure that these both have a nice comparison. And then taking it one step further, I'm going to go into Style and Settings, and I'm going to synchronize the crosshairs for these. Now I don't typically use this, but for this example it's a good case to kind of show what this indicator can do for you. So of course, let's take a look at last Friday's bar. So you can see here where Friday's session began. Of course, that leads us into the cash close, and you can see that there was just a steady decline all day in the vol spread. What I like to do here is come in and look at how the session is doing for the last hour into the close. Now, of course, right now we've got about 90 minutes, so it's a little bit more than usual. But what you'll see is this is typically a good indication of what's going to happen into the close. So if we zoom in here on Friday's bar, and then we zoom in on Friday's bar for the vol spread, we'll notice that into the close, of course this is using 3 o'clock or 1500 as the cash session close. We come back and kind of take a look at it where it was an hour before that, or let's just use 90 minutes. And you can see right here where the vol spread started to take out the lows. We'll draw a horizontal line there. So that was the lowest level that the vol spread had made all day up until 90 minutes before the day ended. Then we kind of come through here, and it's here again, this may not be a perfect example, but it's, think about what it's showing you and think about how we can use this in the future. So here it takes out the lows, and the S&Ps sell off hard into the end of the day. So the vol spread is something that can give you a heads up on what kind of action you might see into the close. I think that's especially helpful on days like today, where it's not real clear which direction we're going to head. So I'm going to delete this hold level and zoom in on today's vol spread. So we come in and we're looking at Wednesday's session. Right now, like I said, we've got about 90 minutes until the cash session closes, and I can see that the lowest readings we've had on the day are right here about these levels. Notice how this coincides with the lows that we've put in place here on the spiders. We zoom in on Wednesday's session from the spiders. You can see the low there is about 168.91, and the way I would use this is say, if the vol spread comes through and takes out the lows on the day, I would expect that to precede taking out the lows here in SPY. So once you've got something like this laid out and you've got it kind of configured the way you want, you can come up into your grid here and save grid as, let's just call this vol spread versus SPY. And the next time you get ready to bring this up, if you've got a completely clean chart, say we start with, you've got absolutely nothing on here, and then you load this back up with the vol spread versus the SPY, you can quickly bring up this exact layout to get a feel for what we're going to be looking for into the close. Of course, alternately, I look at the same thing to the upside. So if we do end up holding those lows in the S&P, which right now, still kind of testing them down here at 1680, 1684, that's kind of the zone we've been focused on today. If that does hold, and instead vol spread takes out the highs on the day, then you would apply the exact same logic to the spiders. So right there, you've kind of got a range established. We'll be watching that here for the next 90 minutes, and hopefully it'll give us a heads up on the direction that that's going to be moving. So I do like using that into the close. It's usually a good idea on days like today when you can't really quite figure out which direction we might head. The vol spread can give you a heads up on that. We're also looking at the ticks, where you can see the longer term look back periods have gone essentially perfectly flat, while the immediate or the 30-minute time frame is a little bit more bearish. So those are all good things to watch into the close. It'll help you get a feel for which direction you need to position yourself, especially if you're focused on day trading. And that will give us some good information to watch into the close. And Ted, those were weekly squeezes on those two plays. So on Amazon, I continue to hold the 310, 305 put credit spread. It's kind of the same thing as the rest of the overall market. We really want to see these levels can hold, and we rally into the close. Also, using the ticks is going to be an excellent way to know what kind of action you can expect into the close. Like we just looked at, the 60-minute or the broader time frames are looking pretty much sideways. And really, I analyzed this stuff more just in the last hour, so it may still be choppy over the next 20 minutes until John comes on and kind of takes us into the close. But this will give you a good idea where if things start to shift and you see these lines start taking more of a bullish tone, well, then you would give the 1683 zone the benefit of the doubt as support, and I would look for this to head higher into the close. But it's all about trying to use all of these with each other for the best possible setups. And then in order to save that grid, you can just do that. I already closed that chart out, but in order to save any of these workspaces or anything that you configure that you like, just come back up into the grid dropdown, and you'll find an option here to save grid as. This is an especially useful way to manage your workspaces in thinkorswim, because like here, like nightly videos, for example, I can click that one, and it instantly loads up with just a nice swing perspective, where I can see the daily with all my moving averages, the hourly with the squeeze and the waves. If I wanted to load something different up, you can see how if you take the time to customize these and allow them to fit in all the various types of studies you like to use, it's a quick way to come back and reference those levels. So I like that feature of thinkorswim quite a bit. And then Ralph asks a good question. What is a good way or a good process to determine my trading personality? Ralph, a couple of things you want to think about first is how much time do you want to spend sitting in front of a computer, and how much does your job allow you to do that if you're still actively employed during the day? That's going to change the type of trading you want to do. If you work nights or something and you can sit here and watch these during the day, then maybe day trading is more geared for you. A lot of people that aren't able to do that prefer to take the swing perspective. And I also want to think about what type of trading, are you the kind of guy that wants to get into something and you're out in 5 minutes? Or do you prefer to take a position, let it work itself out, and look for a bigger move? I have tried both, and I have found that I prefer just being able to look at bigger signals. Also keep in mind, if you're really thinking about trying to be a day trader or a scalper, I've always found that it's just easier to have bigger time frames. That way you can really try and catch bigger moves. Also, with the bigger time frame setups, you can kind of make sure everything is going in your favor, and it gives you a higher probability setup. So I don't know. That's just the way I look at it. There's a lot of different ways to go about it, but I think that is a good way to at least get started.
Oh, nice. So this is okay. So beautiful target here. So ILM in. This is one we were looking at earlier on squeezes in the room, and So you come up, you go right into the 1272 target, and this, by the way, is like one of my favorite setups of all time. You get the squeeze, you had the high, bam, 1272 extension. Okay, so now the question is that we're pulling back. Can we get in again? The answer is yes. Okay, and you've got, not only are you into cluster support, you're into trend line support. So that's actually a pretty sweet one right there. Okay. Now on the hourly chart, we have a squeeze. I'd like to see this momentum shift so we can see that this, this downtrend is done. But overall, it looks pretty good. Okay, so let's look at MasterCard. Where can you find upgrades and downgrades? There's news alerts, but honestly, all you got to do is just pre-market. Any stock that is down $5 or up $5 typically was upgraded or downgraded. I believe in. Let me see here. I'm looking off screen here. Is there one there? No, that's not what I was thinking there. So, all right. So what we can look at here then. So for MasterCard, nice. Now remember, we're talking about the percents, right? So MasterCard is what? It's down 1.62%. So if the market really tanks here into the close, MasterCard is going to go down with it. MasterCard is moving with the markets today, okay? So I wouldn't want to do put spreads on this, even though this, the stock has been fantastic. Right now, it's caught up in the selling. And, we might ask, is there any premium to sell up here? Well, you know what? Actually, let me clarify this. I don't like that it's moving with the markets, because I'm not sure today if the markets, the markets could do anything today into the close. And it's really just about finding good setups, okay? And I don't see a good setup here. As opposed to, like, well, let's compare this to Tesla, right? So that's what we're not really trading stocks, we're trading setups. And Tesla here is a beautiful setup. You got a daily squeeze and an hourly squeeze. So one of the things that we can do here, let's look at Facebook too. And Facebook Facebook acts great. Now there's not a squeeze here, but actually good. But let's do this. So I like to look at 60-minute squeezes and 39-minute squeezes. So let's do this. I'm going to format this, and let's look at hourly squeezes first. And I want to see what's setting up as an hourly squeeze. So what this will do is it'll just tell us, hey, this is everything that's setting up as an hourly squeeze. Got this. Yeah, okay, and the news on TOS, yeah, has a ton of stuff like that. So if we look at this now, and we can just say, all right, let's look at the hourly squeezes. And what I'll do is just set this to an hourly chart and say, okay, so we have a squeeze on CRM. Okay, so let's look at this. And data here is taking a minute. Okay, so there we go. So now remember, I always also want to look at a daily chart to get an idea of where the stock, where the stock is, from whence has it come. So daily chart, there's not a squeeze, but we're near the highs. We've pulled back. And on the hourly chart, we have a squeeze, which bodes well for this going higher, into that level. So that actually looks pretty decent. So that's something that we could look at here. Let's see, I'm going to move this over here so I can watch it while we're talking. Okay, what else has a squeeze? So Tesla, we've already looked at that. This to me is picture perfect setup. Really, really like it. Daily squeeze, you got an hourly squeeze developing within that. That looks great. Okay. Ticks right now are just kind of hovering right around flat on the day. And let's see here. So we got CRM. We looked at that. Netflix, that's in a squeeze. So on the daily, on Netflix, we don't have anything going. Okay, and we have a one-dot squeeze that's already triggered. Okay, so that's the one-dot squeezes are actually fine. The problem is they typically happen so fast you can't even react to them. So it's there's not much we can do there. BIIB. Let's take a look at that. So bib here, again, daily chart, no squeeze, very bullish, extended, and here's a squeeze with the momentum going higher. So this might be a candidate for an overnight put spread. REGN, also a biotech stock, has a squeeze, okay? If we take a look at the daily chart, very extended, obviously, okay? And remember, stocks like to revert back to the mean, so that 21-period moving average. And again, so it's not as clean of. Okay, let's compare that again. Let's go back to Tesla. I think what's good is that when you see what I would call an ideal setup, then you stop looking at the stocks and you start looking for setups. Okay, now boom, we've triggered off. So on Tesla, what we're looking for in the hourly is, first of all, the momentum didn't even dip below zero. Okay, it's very bullish because as the momentum came down, what did the stock do? The stock just traded sideways. That's very bullish, as opposed to the ones we just looked at. As the momentum came down, the price actually came down pretty significantly. Okay, so that's really what you're looking at. If you're really going to risk your hard-earned cash, that is the kind of stuff that you want to look at. Okay, so let's go through here. That was Tesla, QIHU. So for QIHU, I love this. I mean, this stock's just been phenomenal. I mean, look at this trend. Just bam, 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 bam. So any squeezes like on this stock, by default, you're looking for a continuation of the trend. Here is this last one here. So this actually looks, this one looks good. It's not as clean as Tesla, but you've got a stock that is just a trending machine here, okay? Groupon. Now, Groupon's interesting here. So for Groupon, now as a rule, I generally don't trade options on stocks that are this low priced. It's just that there's not as much bang for the buck, so to speak. However, that being said, you can still do it on these stocks. So you could sell, buy some $11 calls, et cetera, et cetera. I'm just typically looking for bigger stocks. If if I'm going to buy 100 or even buy 10 Priceline calls at 7, or I could buy 100 Groupon calls at 70 cents. Well, guess what? The 10 at 7 is going to cost me 90% less in commissions. So one of the advantages of trading smaller size on the bigger stocks is that you end up paying a lot less in commissions, and that does add up over time. Okay, so hourly. See if there's anything else here. Oh, CELG. Let's take a look at that. CELG on the daily chart has come down here to the moving average. You can see it's dipped here. So again, I like it. It's not as clean as Tesla. Hopefully, Tesla is that's kind of like the ideal kind of a setup there. So what I'm trying to do is just find something else that looks like that, either up or down. I don't care. I don't care if it's a bullish play or a bearish play, but that's kind of what we're looking at here. All right, this is interesting. Now, I don't know if Trip, I'm assuming it has options. So that's had some volatility here. We've got a daily squeeze setting up. We're above the 21, and we've got, so that's actually fairly interesting there for a put spread. Okay, so now what I want to do, I'm going to drill down a little bit further here, and I'm just going to change this to a 39-minute interval. So one question might be is like, okay, well, why do you want to look at a 39-minute chart? Well, it's really just more, it's kind of anal retentiveness on my part. The trading day for the cash session has 390 minutes. So if you do an hourly chart, what happens is you have 6 bars that are 1 hour, but then you have 1 bar that's a half-hour bar, 1/2. So it's not equal. With a 39-minute chart, you have 10 equal-length 39-minute bars. Okay, so you could do also like a 78-minute chart that's 5 equal-length bars. So that's just the whole idea behind that. It's not, is the 39-minute chart, is it that much different than a 30-minute chart? No, okay, but it's just something I like to do, but it's not going to make or break anything. Okay, so now let's go through here and see, because it's been, the good news is it's been actually a really quiet day, and when you get a quiet day, you start getting squeezes, and when you start getting squeezes, what's happening is that the market's telling you, hey, you know what, we've been building up a lot of energy, and I need to release this energy, and that's what the stock market has done. Now, if we look at the daily chart here on the S&Ps, guess what? We've come down to support. We're above the 21-period moving average. It's obviously this market's been going up and up and up, and my concern has been, of course, that the week after triple witching, we can't get anything going. So I'm keeping an eye off screen here on the ticks, and my question is to the market participants, is today the day because we pulled back to support on the S&Ps, is today the day you guys come in and buy this thing, okay? And guess what? We don't have to guess. All we got to do is watch the ticks. If they come up and go to plus 1,000, pull back to, like, plus 600 and go back up again, then that's it. We've seen the bottom for the week, and we're gonna start rallying. That's what I'm looking for, okay? If we don't get that and we're just sloppy, then our trading strategies are going to be appropriate for that, which is going to be more just selling one standard deviation out of the money premium, okay? And I know I go kind of quickly, and I cover this stuff because, I mean, this is like the back of my hand kind of a stuff. But I'll reiterate this also again tomorrow. I just want to, I want to replicate as much as possible, just kind of like, hey, this is how we actually look at the day, and this is how we make decisions. And if you get the one concept that stands out is that if there's an uptrend and it pulls back and you're starting to get the idea that you can put the odds in your favor by selling a put instead of buying a call, you're going to start making a mental shift and start trading on the same side as the market makers. Okay, and so that's the cool thing there. Let's see. Okay, so tick. Okay, let me bring this one back over here because we're starting to get some tickage. Never mind. Just kidding. Let's see here. So these ticks are, they're really, and again, the funny thing is like it's not committal either way. Like it's not committing to the long side, not committing to the downside. But typically what will happen is in about the last half hour, you'll get sell programs or buy programs that hit. So what I'm doing here is I'm watching the ticks, watching the NASDAQ, watching the S&Ps, also watching Apple. If for some reason Apple breaks higher, then Apple's a pretty good market proxy. If Apple breaks down, the market's probably going to break down too. Now, guess what? The good news is that really won't impact Tesla very much. Tesla's in its own little universe here. All right, so, okay, yeah, let's look at LinkedIn. So, oh, good, okay, a couple of you guys are giving me. So what I'm going to do here is I'm going to change, let's change this to 39-minute. Yeah, LinkedIn actually looks really good. I'd like to do something on that one. All right, so LinkedIn on a daily chart is very bullish. We've got a 15-minute squeeze. We've got this. On a 15-minute chart, it looks a little sloppy, but again, remember, if you look at a daily chart, and I apologize, this is going to have all the voodoo lines on it. Oh, no, it doesn't. But on a daily chart, it's bullish, okay? And that's the thing you always want to make sure of is that you don't want to see like this right here. This was a great squeeze to the downside. I never would have taken this trade. Why? Because it's a squeeze to the downside on a stock that is uptrending, okay? Always keep the odds in your favor. If a stock is obviously uptrending, okay, then just take the squeezes that are in the direction of the trend. It doesn't mean, like this one, okay, bam, you get in there and you get the money. Now here, yes, that would have been a great trade, and I don't know why, I don't know if that was a downgrade or what, but a lot of times what happens is that if you get a squeeze, in this case on LinkedIn, if you get squeezes that are negative and the stock's in an uptrend, they usually don't actually work out that well. Look at this nice, beautiful, long squeeze, okay? It's great about stuff like this, and I appreciate being able to talk with you guys about it because if I showed this to like my wife and say, honey, look at this is amazing. I mean, she's just like, her eyes glaze over. And it's fair because when she talks to me about fabrics, my eyes glaze over. But if you look at, there was one on here. Okay, well, anyway, that's the general idea. This down squeeze actually worked pretty good. Most of the time, if there's a short squeeze like this and the daily trend is up, it usually doesn't work out that well. So I'm not, I don't spend a lot of time on counter trend trades. But don't get me wrong, I actually prefer down markets. As a trader, you can make more money faster in down markets than you can in up markets, and because markets go down like 3 to 4 times faster than they go up. So I'm a closet bear because I love markets that go down, but you don't make money trying to pick tops. That's a way to get destroyed. I know I've seen a lot of guys trying to pick tops in Tesla, and they're just drinking a lot this year. I mean, that's a very hard thing to do. Okay, so let's see here now. We've got the ticks popping up. We're at we've got 20 minutes left. I do want to put on a couple more trades. What I'm watching for is to see, are the market participants, and by market participants, I don't mean us. Okay, we are not going to move the market. Now, we've done it before where we could place a trade on a non-liquid option, and we could actually move that market, right? But we're not going to move the stock market. So what I'm looking for is oh, good question. So, John, is it too early to put a put credit spread on Tesla for next week? Also, absolutely not. No, just you can completely do that. It's a great idea. Same thing. If you're looking at it next week, just go a little bit further out. 1 standard deviation, if you want that safety, or you could even do it at the money as well. Okay, so the ticks are giving us nothing. So we're going to have to just kind of focus on selling some premium here. I'm just looking, besides Tesla, is there anything else here that looks interesting? And I just want to see if we're going to get some short covering into the close. I'd like to get aggressive about having some stuff for the overnight. Amen on the glaze over the fabric. I mean, I feel bad because I love my wife dearly, but it's like she even asked me yesterday. It's kind of like something like, hey, something about a rug, and I was like, honey, please, my mind is completely, it's kind of like, I don't know how to explain it. Like, if I'm looking at the markets, my mind is focused. But as soon as I start hearing talk about fabric and seeing samples, my mind actually starts clouding. Like if you haven't had caffeine or something like that and your brain's a little foggy, I mean, it goes immediate into fog mode. And I don't know if she just understands that at all. Okay, yeah, let's look at Trip because I like that one. It has nothing to do with my feelings for you, honey. I just don't give a shoot. Let's see, Trip. Okay, so Trip does have options. Now, oh, that's right, it doesn't have weekly options. I knew there was something I was trying to remember about it. So it only has monthly options, but I like the setup, and that's okay. I mean, and I don't do, not every trade is a weekly option. It's just understanding like, okay, so the expected move here is $5. We're at $75. So is there any money in selling the $70 puts? And there is. We could sell the $70 puts and 70-cent credit. I'll do this all day long. Okay, so let's actually set that one up. Dink, dink. And again, so and you can see what I'm doing today because the market's not giving us any confirmation. I'm erring on the side of safety, okay? Instead of buying a deeper in the money call, okay, and say, buying a deep in the money call for $7.90, I'm instead going with the higher probability trade, even though it's not as exciting, right? It's more exciting to buy a call and watch the stock explode and watch your call triple in value. That's way more fun. But what I'm talking about is consistency and being able to make a living doing this. This is the monthly. All right, so let me, I'll post that here real quick, and then I want to look at some. All right, so you'll see here again, what I'm doing is all the weekly options are above the dotted line, and then below the dotted line, we'll have different, like, so that's the November, so this option is the October monthly series. All right, so I'll leave that up there for a second. Again, no conviction here, okay, no conviction. In the markets, I feel like, what's the guy, Dr. Evil is like, come on, throw us a bone here. But there are times, though, when, I mean, the markets just don't, they're sloppy. They're sloppy all the way into the close, and that's just what we have to deal with. And the important thing is not to try to force feed the market something that doesn't make sense, okay? Don't sit there and try to buy a bunch of calls in a market that's sloppy because you're going to lose money. And especially don't buy a bunch of calls in a market that's about to sell off and die. Obviously, you're going to lose money in that case too. So it's knowing that when the markets are kind of choppy and sloppy, err on the side of safety and sell premium, okay? So let's see here what else we have. Okay, so I got some of these. I got half of those trip puts. Now, yesterday, by this time we actually had some pretty massive sell programs hitting consistently. So far today we don't have anything. I'm not seeing a race to cover or anything of that nature at this point. And we've got now we're about 15 minutes left, and it looks like we actually may get a little bit of short covering here because we're not getting sell programs. And for people that were positioned with the idea that, oh boy, we're getting some sell programs, they are going to want to cover. So we'll see. Again, there's just not the conviction here. There's just not the conviction. I also would like to do something on LinkedIn here. Again, LinkedIn positive on the day in a negative market. Let's see here what else we have. All right, tick's just kind of hanging out there. Still no selling. All right, so again, what I'm trying to do is just get a kind of a mental, a mental kind of picture of, what is this kind of market made of right now? And when I talk about the selling after triple witching, it typically will last, 3 or 4 days. So this is day 3, and what I'm looking for is there evidence that the selling may be over and we rally into the end of the week, right? So that's what I'm kind of trying to look for here. And at this point, it continues just to be quiet, choppy market. So at this point, I'm going to focus still on selling premium. Let's see. And Apple actually looks like it's going to go crapple here. All right, let me see here. Got that. Tesla acts amazing. Okay, here we go again. So again, just looking for it. Usually in the last 30 minutes, you're going to get a series of buy or sell programs. We haven't yet. I just want to see are we going to get some to the upside here. And I do want to place one more trade. I'm keeping an eye on LinkedIn. Potential put spread there. I love our call spread on Google. That looks great. Tesla looks great. Tesla, since it made new all-time highs, has a pretty decent chance of gapping up tomorrow. We'll see on that. Tick still, kind of lightly strong here. Nothing to write home about. Yeah, let's see. Yeah, let me put Facebook on here too. So Google, we don't need to watch that. I want to put the stocks on here that we want to watch into the close. Oh, Facebook does look really good. God, oh, nice squeeze too. All right, so Facebook, LinkedIn, those are 2 candidates here. Watching this, yeah, let's look at Priceline. Apple's is dying, so there's nothing to do with that. And now we could sell call spreads on Apple, but what I don't like about Apple is it's so news sensitive right now that you wake up and it's like, okay, great, we got another upgrade, or it's up 25 points, that kind of thing. Okay, so we got this. Yeah, and I do like QIHU. Actually, you know what? I'm going to put this back on Apple, because if that really goes, if that actually starts to crater, it'll be interesting. I just want to watch what the NASDAQ's doing here too. All right, so we got about 10 minutes. So let's look at QIHU. I do really like that one, how it's setting up. So for TRIP, I'm completely filled in TRIP. All right, so we're tripping out here. And QIHU, so it does have weeklies. We're fairly bullish. Let's keep an eye here on the ticks. Ticks are very sloppy. And expected move is $3.35 implied. So this is what I want to see. Implied volatility is beautimous. It's very high here. That means that we have a lot of premium to be sold. Okay, so we're at $87. 87 minus 3, let's call it 4, would take us to 83. So, you know, the 82 halves, it's a little thin there. The 85's a little bit more premium. So what's nice about this is we could actually do a $2.50 spread, okay, for 50-cent credit, and it's a kind of a 1-to-4 risk reward, and that's fairly typical, all right? So I do like that one in terms of a weekly option. So it's sending that one out, and I will post that one as well. Oh yeah, Goldman Sachs has some good clusters too. Goldman Sachs actually would probably be a good candidate for an Iron Condor to check the premium on it. All right, so that order is working. Let me post this in here. Now this will be one of the weekly option candidates, so I'll put that there. Let me change the font on this so it can actually fit all this stuff. Okay, so there we go. So those are all the trades we've initiated today. And yeah, the markets just don't, they just look very, for lack of a better term, crappy here. So I think that's probably good. I was looking to see if we could actually get any kind of action in terms of, let's see here, any action in terms of, you know, some overnight trades, but I just don't like how the market is acting. You know, it's acting a little nuts or a little sloppy. You know, my concern is the tricky part of this market is that you've got a market at this point that, let's see, we got this there. You have a market at this point that is, you've got that potential for the weekly, for that, you know, that the post, cancel that there. You got the post triple witching to actually turn into something really ugly, right? So that's the potential. So I actually would like to almost buy some directional puts on something too, just to kind of take that into account. All right, so we got that. And let's do this. All right, so I'm looking at this, and I really like how LinkedIn is acting here. Again, I'm still watching the ticks. LinkedIn acts great. And look at this. Look at Apple, just death and destruction from above. So, you know, guys, I'm pretty comfortable with this. I almost would like to buy some puts here on Apple. You've got a nice kind of overnight squeeze setting up. You know, the tough thing here, again, just happens to be, you know, this thing is just such a kind of a wily beast. All right, so I'm going to look at, let's look at the Qs, actually. Well, they're only down 26 cents. Let's look at, all right, we did Google. I would like to see, look at that. All right, gosh, well, Facebook is kind of a no-brainer, so let's do something on Facebook. That thing just acts fantastic. So for Facebook, again, you know, it doesn't matter what the market's doing here. I would like to, again, err on the side of selling puts, and I'd like to do an at-the-money spread. So look at this. The $49.50 puts are huge, huge premium here. So let's just do an easy little premium here. We're going to do the 49.5, 49, 25 cents, 1-to-1 risk-reward ratio. Okay. Now, if you're more aggressive, you could buy calls on this as well. So So let's see if we can get filled on that. We've got about 5 minutes left. And just kind of keeping this a little bit of conservative, keep our powder dry for tomorrow morning, because tomorrow morning we'll be looking at getting fairly aggressive with some plays too. And the only other thing I could think of doing here would be buying puts on Apple. But again, like I said, Apple to me is, it's kind of like a rattlesnake sometimes. Just about the time you're going to reach over and bend down to kind of pick it up is when it's going to bite you. All right, so let's see if we can get filled on Facebook. And market's just very quiet in the close. S&P is down like 5 3/4 points, not doing too much. Apple looks like it wants to just kind of puke it up and give up the ghost there. Facebook's still trying to get filled. We should, I mean, if it's getting a little bit of selling pressure there, we should get filled. The other thing here is I actually wouldn't mind doing a Delta 70 call, because most likely what's going to happen is on Friday is this thing gets pinned at $50. So if you look at that open interest of 22,000 contracts, it's most likely going to pin there. So the other thing we can do here is actually do a debit spread. So I haven't done a debit spread today, but let's do a 49.50 debit spread. So we're going to do a buy a vertical, okay? So we're going to buy the 49 and sell the 50. So we're going to offset our cost a little bit, and it becomes a 43-cent debit, okay? And the risk reward on that is pretty good. So let's see if we can get filled on that. We've got about 3 minutes left. That'll be the last trade that we do today. And let's see, copy. This expires this week. And let me put this up here. Okay, and note here too that if it's a credit spread, it's going to say sell. Okay, credit spread, credit spread, credit spread. That was a filled credit spread, right? Sell. If you're going to do a debit spread, it'll say buy. So that's the main difference there. So, and I put that in the presenter's post as well. Gosh, Facebook just taking off here. I may do another one here, just get a little bit more aggressive, just at the current market. Oh, I don't think that was what I wanted to do. Let me see, buy vertical, 50. We just need a little bit of a pullback there in Facebook. It's like, come on now. Okay, working that order. Gosh, look at Facebook. This is acting really, really good here. All right. Gosh, I really hate to do market orders, but I would like to get it. All right, so we have 45 seconds left. I'm really bummed here that we're not getting filled on that. Look at that. It just keeps pushing higher. Now, of course, you can always just buy the stock, right? Let me try one more. I'm just going to do it at the current level, 49.50. We're at 46. I'm going to do 47. Try to pay up for it here. I mean, come on. So no dice. So that was a bummer, but it's not a big deal. It's going to still have its premium tomorrow, so we can actually try to get filled on it tomorrow as well. Oh, look at this. Just got filled on one. Thanks for nothing. Woohoo! Got my one contract. You got it at 47? Yeah, we could do butterfly too, and we'll probably look at that tomorrow. So very sloppy day. I mean, very, very sloppy day. So Apple just just looks horrible. That's a really nasty piece of work there in Apple. Um, Tesla looks fantastic. Facebook looks fantastic. The markets just look sloppy. Okay, so again, our main strategy here has been focusing on selling premium because when the markets are not as clear, it's a higher probability trade to sell premium. And then for the directional trade, we focused on a Tesla, which is, in this case, a stock that just doesn't really care what the market is doing. Okay, and so just reviewing the trades here. Now, for those of you that were in this, we're going to obviously do this again tomorrow, so I'll be in the room tomorrow morning. We're going to start reviewing this stuff. If you'd like to join our trading room, you can go to simpleroption.com/gold, okay, and that will take you to a link that will allow you to sign up for our trading room. Our trading room is very reasonable. It's $147 a month, and it allows you to get in there and see what we're doing like this on a daily basis. And we also send out text alerts. So if you can't be in the room that day and you're at work, you'll get a text alert as to the trade that we're doing. At some point, because now our room is actually getting pretty to capacity, we're going to look at raising the price to $295 a month. Now, if you get in at $147, you're grandfathered in. We never would raise the price on anyone. It would just be a higher price for newer people who are coming in. Okay? So, so that's what we got on that. And then for tomorrow, like tonight, I'm going to do, and also what this includes is nightly videos where I actually recap the day, put together kind of a trading plan for the next day, and especially on what to expect for the markets as a whole, okay, which is important. All right, so that's what we have. And at this point, for those of you that were in the open house, thank you for joining us. Hopefully you got kind of a sense of just kind of the stuff we look at. And like I said, the nice thing about when you do live markets, it's like, it's like Forrest Gump says, it's like a box of chocolates. You never know what you're going to get. Oh, I see some questions here just on what the page looks like. So if you go to the website, it will say, let's see, simpleoptions.com/gold. What it's going to look like is this, okay? And you can see you'll get essentially you get, this includes what's called the silver plan, which is the daily options video newsletter. You get the access to the live room, okay? We also do a monthly options expiration class. There's a big picture outlook. Plus what this doesn't mention is that you also get text alerts, and then you also have text alert. Let's do A. You also have access to our forum where you can go in and ask for questions and stuff like that too. And with this, you'll also get the 6-part Options 101 online course if you're newer to options, plus the beginner's guide to how we use Thinkorswim. And again, you can, for $147, you get all this, and you're in. And obviously, if after a month you don't like it, you can always cancel. Anyway, that's what it is. And that's what we have. So hopefully you guys had fun. For those of you that were in the open house, we'll be doing this the same bat time, same bat channel tomorrow. You guys have a fantastic evening. And again, that link is here. I'll get this font here real quick. And for those of you that have questions, I'll give you the office phone number. So that's the link. And then the phone number here for the office, 266-8659. And it's a great group here that can help you with any questions, anything like that you might have. And of course, you can also email us support@simpleroptions.com. All right. And then tomorrow, of course, we'll be doing. Today you saw me get into positions. Tomorrow, some of these I may be getting out of. I'll also be adding additional positions for when we kind of head into options expiration Friday. One of the most fun times to set up trades is setting them up Thursday afternoon, because you get that huge overnight theta decay into Friday, and then you just kind of take them off, and it's a nice one that way. So that's what we'll be doing. So again, for those of you that are in the open house, thanks for joining us today, and have a fantastic evening. And for those of you that were in the room, hopefully you had a fun day today, and obviously got some activity going in terms of trades and stuff like that. And it's gonna be an interesting week. I mean, these weeks are always the week after options expiration, anything goes, or the week after triple witching. So it wouldn't surprise me that if we got a huge down day, or that this thing just stops and we reverse, or we chop. I mean, anything could happen, and it becomes critical to understand and learn how to watch the ticks, how to watch the vol spread, so you can get an accurate reading on what's going on. Okay? All right, you guys have a fantastic evening, and we will see you bright and early tomorrow morning.